This is Justin Pulitzer. This is my weekend review video for Sunday, June 11th, 2017. Pretty interesting week we had. There was a lot that took place. You had the Comey testimony, you had the British elections, and on Friday we had a pretty large expansion of range in the Nasdaq, but we'll get into that in a moment. First and foremost, as you can see, what I have pulled up here is the probability of a Fed rate hike that will be decided on Wednesday. It looks like a done deal here, 99.6%, that there will be an interest rate hike. And I'm basically going to say that that's a done deal for this meeting. The question really is going to be if they are going to be dovish or hawkish in their comments. My guess is they're going to be a little bit more dovish. They usually tend to be when they hike. I don't necessarily know if they're going to say it's one and done, but I think that they're going to be heavily data dependent. Again, the metrics that the Fed wants to see increasing, particularly inflation, has not been all that cooperative. And I think that they would really behoove themselves to kind of drop. They won't, but it would behoove themselves to drop the act. And they should just say, listen, we're hiking now while we can, not when we have to. The market's at all-time highs. The economy may not be ideally, but it's plugging along and heading in the right direction. And more importantly, we aren't at levels where we require crisis interest rates. I think if they would just say that and stop with the pretense and all the pomp and circumstance and, frankly, bullshit, I think the market would just get it. And they should say, listen, we're not going to hike overly too much to, cause a recession. We know that we've been mindful that Fed interest rate policy in the past has been troublesome to the market. They're not going to outright, say that they're responsible. And I'm not going to completely pin the financial crisis on the Fed, but hiking interest rates 17 meetings straight, up to 6% after telling everyone to take mortgage loans when rates were low wasn't exactly the smartest policy either. So Fed hike coming on Wednesday. We're going to have to see how the market takes that, and we'll have a Fed day range, more importantly, a fresh one to trade against. There may be a little bit of a pause until then. If the market rallies into the Fed, it's always more precarious. If it dumps or has the proverbial shake and bake, meaning if we're down into the Fed, that also increases the probability of a up move, but we are really still pretty high in range. I think also some of the weakness in the FANG stocks on Friday. First of all, there was a very big rotation, and we're going to get into that, out of FANG and into like the banks, the healthcare names. I could even make the argument some transports, oil, XLE, those type of names were strong on Friday. It was sort of a rotation from the winners to the sectors that were beaten up a bit. Maybe the Trump trade is coming back on. But more importantly, big FANG names need low interest rates to kind of have multiple expansion. That's sort of what's been fueling this, the lower for longer, if you will. And I think when the market sniffs out that there could potentially be growth, it rotates out of the names that sort of are growth independent, meaning they'll grow with a strong or with a weaker economy, into stocks that really require a strong economy, if you will. We'll get to that, though. Again, this is just a little bit of a preview. Friday, there was also another confluence of events. You had Citron, that's Andrew Leff, the prominent short seller, who came out and basically said Nvidia should be priced about $20 lower. This worked for him before. I guess he'll keep doing it until it stops working. And then Goldman Sachs came out and they said that they're calling it FANGMA, whatever. They included Microsoft. That they were kind of hinting that the FANG names basically were starting to look similar to what happened in the year 2000. In the dot-com bubble. I'll tell you, they have been very lofty and sporty. Some of these have been up a lot and have reached some of my price targets, and we'll get to that. Nothing goes up straight, but as far as the comparison goes between first of all, the PE multiples up outside of Amazon aren't really in comparison, and these are some huge companies with much more cash, balance sheet cash, and frankly, real businesses. The Exodus.coms, the CMGIs. These weren't really sustainable business models. Most of you, the web vans, people don't even know these names anymore. Toys.com, I remember these things coming public with these huge multiples. Completely a joke. Google, Facebook, these are serious dominant players. I mean, you have billions of people every day that use these businesses. These aren't going anywhere, and they generate huge amounts of cash. So that's a little bit of a different take on things. Anyway, let's delve into this. We're going to start with the 10 market keys. I've expanded that from 7. We'll touch into some of the metals and stuff like that. Then we'll get into the major market indices. There was a pretty big divergence, as I had previously mentioned, between the S&P and the Qs. Believe it or not, the Dow actually had closed positive on Friday, as crazy as that sounds. And then we'll get into the Nasdaq tech names and so on and so forth. I think there's a lot to dive into there. So first and foremost with the VIX, you had this started out looking like it was going to be an outside day, and you did have an outside range day, but it wound up settling down into range. VIX didn't really close all that strong. How could that be with the bloodbath that took place in the Nasdaq? Because the S&P was barely down by the end of the day. Like I previously said, there was a rotation from tech into energy. Like if you looked at just the bank names, you'd have thought the market was up. Pretty cray-cray. That being said, we had a new low, which is, I guess, good for the bulls. But I do think that these new low type of moves aren't so sustainable. We had that, remember here, a bit of a rally back up, came down, and then, it kind of started picking up, and we had one of these spikes. We have been in a series of compressed volatility. Look at this, all these lower highs. Eventually, we're going to get some kind of a breakout in volatility. Is this the time? I don't know. We'll see. But until we start getting sustainable closes above the 200 MA in the VIX, I don't really get too worried. And until we sustainably crack this downtrend line, it's just another kind of plop up in IV. It's unsustainably low down here, and then up here, people start getting the idea of selling some premium. The dollar, I had mentioned, has been very oversold, and this came from a lot of strength. Now, what happened here in the dollar? First of all, we got this 1.618 fib test. I had mentioned the channel low in this area was going to be the area, right, for the bounce, potentially with a little bit of an overshoot down to this reference low. So let's discuss what went on here. Let me clear this out so we can see. Now, what you had here was a worry about the French, the Frexit, right? That the French could elect Marie Le Pen, that they would be exiting the Eurozone, and unlike Britain, the French were on the Euro, the English were not. Now, my take on that is this, is that, and I don't want to be too insulting, although let's just leave it like this. The French are not the Brits. They have never historically had that kind of personality characteristic. And I never, listen, I was in favor of Le Pen winning, but I never actually thought she would be able to pull it off because of that. I think they want to see what goes on. In 5 years from now, she'll get another shot if she wants to do it, but we'll see how that plays out. But that being said, the dollar was getting way oversold, stretched. We still haven't even broken out of this downtrend line. You kind of have a doji here right at the 20 MA, and we're now a little bit above the 10 MA though, which I think is a little bit more realistic. If this does break out, I think you'd fill up the triangle here to this like 98.13-ish easily, and maybe it's due for a 50 MA test. Look where the 50 MA is, right at the breakdown point, right where this all this congestion took place. Look at this reference low. It was a little bit below this one. Rallied up, look below and fail, congestion, again a look below and fail, a move up. This area to me seems like a important point of contention, so it wouldn't surprise me this week if the Fed is a little bit more, if they hike rates and they're maybe a little more hawkish, there's some type of a bounce back up in here in the dollar. It's just been creamed, right? Could it rally still further to retest the backside of the old uptrend line? I am expecting that at some point. I just don't know when that may be. But this, to me, first and foremost, would be the area of retesting, and then I think that there would be a lot of volume there, considering how many times it kind of touched down into there of people who would be wanting to get their money back. So I think that area would be a little bit of resistance. The UUP didn't quite get my measured move. It still may, maybe if we get a dovish Fed, right? Of the 2447, that's the measured move down, and that's also this old kind of range low. So look at this. We came basically back. We've traded on the old side, on the wrong side of the up channel, and now we're on the wrong side of it from that side. So this area is going to be important. Look where this kind of held. It held basically with a little bit of look below. This was an older, longer-term downtrend line, which I've now left on as a regression line. It wouldn't surprise me, again, to see this thing come back up to that area and maybe even a little bit of an overshoot to the 50 MA. We'll see. I don't know if it's going to get the full channel move, although it is possible. That would be the resistance. Interesting right where it is, right, which would be constitute kind of the breakout point, old support. This, if you kind of X this out, old support, again support here, and this is where the real breakdown took place from. So if there is going to be a rally in the dollar, 25.68 to me would be an area to try to write out short. You have a 200 MA and a 100 MA confluence, and look what was the support here, the 100. Once it broke the 100, it became resistance, and this should be resistance again. I would be looking to put it out if there is some kind of a rally in the dollar up there for a write out short, considering you have both the 50, the 200, and the downtrend line right there. So, and you'd be coming up from the bottom basically to the top end of the range. So that area of somewhere between there, the 50 and here, to me would be where to put the dollar out again if there is any type of rally. If the dollar collapses on the Fed, down here in the 24.47 area would be where I'd be interested in starting to nibble long. Alrighty, the bonds, TLT. So what's going on here, right? We never got the gap fill, and bonds are now back below the 200 MA. You had been moved up. You got basically the top end of range here, a little bit of a look above, now coming back in. So what's my take on this? If this has any kind of pullback down to trend, like somewhere between the 50 MA and trend ahead of the Fed, it may set up for a buy the dip type of a situation, probably with call spreads. If this does rally and get the fill somehow, like if there's weakness in the market early in the week, this area to me would be the area to really put it out. We didn't even quite get the downtrend test, which is a little bit telling, right? I mean, if this was going to be so strong, why didn't we get the downtrend test? So we kind of broke out of the range. It wouldn't surprise me to see a 50 MA test, and this area to me would be an area to maybe take that right out play via call spreads. But anything below the 200 MA is still a little bit iffy. Back above it to me would firm, like if this was kind of up into the Fed the next like couple of days, or even after the Fed just traded here and didn't go down, then I think it could go. That actually is usually the better trade when you kind of get to a downtrend line and then just spend some time consolidating, coiling under it, and then going. That to me is is always a great setup. But well, again, a Fed day range Wednesday will be a big tell. XLU, the utilities. Check this out. Everyone was geeked up about the utilities, and I had mentioned that we had a channel top coming up, and we were pulling back. Yeah, that played out. We have a 50 MA. Look where the breakdown here took place from the 50 MA, and look what started becoming the resistance. Now the support. Again, kind of a little bit of a look below, but support. So 50 MA and trend are coming up. If there's some kind of dump on that on the Fed, I think at the very least there's a day trade for a write-out trade by trend and by the 50 MA. Maybe even a near-dated out-of-the-money put sale. I don't know if there's going to be juice in there, but puts at or near the 200 MA strike if you're thinking longer dated. If you want to play short, I would be buying like 50 MA puts and then selling 2 times out of the money longer dated, because this is going to take a little time to go down at the 200 MA for kind of like a Chicken Little way to get long. Like you're playing for the initial move short lower, but then would want to get long down here considering the overwrite. Often what I'll do is like there's the component of the 1, like the 1 by 2. I'll sometimes close the 1 by 1 and leave the last short put on if there's time. You know, like if this were to come down hard and fast, this is an area that I'm comfortable being long initially into, and I play it that way. You know what, I'm curious just for fun, this wasn't in my pre-market prep here, I mean in pre-filming prep, but what happens if we drew a Fibonacci retracement on that? The low here was 45.33. Let me adjust that. Right. And the high, is that correct? 50, yep. All right, so we don't like 38.2s on bounce, on pullbacks, we like it on bounces. Yeah, look at this. The 50% fib is roughly kind of where this breakout took place. And look where the 61.8 is, down into here. So I like that area in here. If there were some kind of drastic pullback in this, utilities don't really trade. But I mean, look, we've had periods where there have been, you know, pronounced pullbacks. This area to me, considering it's likely a high volume node, let me take a look at that. Didn't expect to spend this much time on the utilities, but yeah, look at that. Look at where this volume node picks up here. Down closer, but in between the 50 and the 61.8. So I think that area to me would be an interesting area to do like those 1 by 2s, buying these and selling 2 times out of the money down here. I may actually look to fill that in trade on Monday or Tuesday. It's usually good to do that into down moves because the IV picks up and you tend to get wider spreads, meaning you can make more money on the actual spread. HYG is not very tumultuous, just kind of hanging out around these highs. Yeah, coming down a little bit, but still within the channel, within the tolerance. 50 MA has been support. I would say this 50 and 100 MA confluence here will likely catch it. 200 isn't all that far away. I don't start to get too worried about this until 200 MAs get lost. That's usually when trouble begins. Oil. So, wow, this is a messy chart. I don't follow oil or anything, right? All right, let me tell you what I'm seeing here. I have 2 time frames put in here and a longer time frame. And look where this 61.8 is. And look where this reference low was here. Not the spike low, because you do have excess now, but this low. And look where these lows are lining up. You have 2 days, higher low, and equal highs here on a candle. And now, I guess, oil opened inside that range. So these lows should technically hold. These are kind of like tweezers, right? So what I think you could do is put a buy stop if you want to be long oil above the 2-day high of 46.18. These are equal highs. And that to me would be where the shorts now would likely have their stops. And that should trigger a move back up to, I think, at least the 10-day MA for a right or right out play. Or you could put a stop or a sell stop for a short below here to retest these lows here. What would be interesting to me, though, is if this does wind up being the low and we do take out these highs, which I think is very possible, we'd have a higher low situation, right? So what would happen to me there is then oil probably would come back up and catch a lot of people. Everyone here now, by the way, is talking about oil getting back down to 42s, right? And sometimes what doesn't happen becomes very painful because everyone sort of assumes that's going to happen. If oil gets back up to 49s again, and I'm not saying it will, but if it does, it shouldn't, quote-unquote, shouldn't be there. And that, to me, would fuel a move that could take us up to those 62s that I had mentioned a while back. So let's see. For right or right out, I like this 2-day range, long above or short below for a right or right out play. Now, take a look at this. XLE, improving. You're right at the downtrend line. You're right at this 20 MA. And what happens if Monday is a move up and we get to a 50 MA? That will probably push oil higher. Remember, the stocks tend to lead the commodity, and this is already over those, over the last highs. So this is an important area in my on my chart, as you can see, I mean, we've had a hard time sustaining, and 50 MA has been really the key. If we were to break the 20 and the downtrend, I think that it would be a given that we'd get another 50 MA touch, and then we'd have to see, because that's getting close to the backside of the old channel. See, look, once we lost that, we had the failed retest, we came down. Maybe it wants to, have some kind of a check back here again. But 50 MA in oil, XLE is really the key. Exxon. Now, this has been a very odd stock. Oddly enough, I've been playing this from the long side and have done well, even with it being down because of my crafty use of short out of the money puts. Exxon is above the 50 MA, right below the 100 though. Look where this kind of was the support. This kind of became the resistance. This area is very key. So you do have a lower low, but we're now starting to make some higher lows. And this push up on Friday was very, very instrumental. When you have stocks like Exxon strong, it's hard to make the argument that the market is weak. Now, what is my thoughts here? Take a look at this. And I literally just saw this as we're having this conversation, as I'm having this conversation with you guys. This was a range low. And look what happened here. Was this a look below and fail? Maybe. And if that is the case, that would suggest that Exxon has a little bit more room up into 83s. Because once you have a look below and fail below a range low, you tend to rotate back to the range high. So I think that there's probably a little bit more strength in Exxon to come, which will be very good for the way I'm positioned. China. Look where we broke down from here. Look where this high was. Does anyone remember my last week's video where I said I thought the resistance was going to come in? That was it, right? Up here. Now we're pulling back a little bit. We're below the 10-day. We should get the 20. We're pretty close. And if you lose the 20, you get the 50. But look where the 50 is. It's right by the 50% fib. If this were to be a down move, and I'm not necessarily saying it would be, I'll say this. You could use Friday's range as a good gauge. Long above, first of all, if we get above there, this would have been, again, a range look below and fail, and this should go considerably higher. But if there is some pullback below Friday's low, you could do put ratios, maybe buying like 20 MAs and selling 2 times out of the money down near the 100 or even, the 50 MA or the 100 MA, which is, look, bin support, and look where that is, right on the 61.8. So if there's some kind of dicey move early this week or maybe on the Fed or whatever, down here would be where I'd be looking with my catcher's mitt to sell out of the money puts, or to at least put on some put ratios for the play down through that move. Baba. All right, so I've been bullish on Baba, very bullish on Baba actually, and I had talked about some upside price targets, right? 1.618 fib extension and 2 times range, which I said I thought we would hit. This got way through there on their earnings. Now, the question is this going to turn out to be an exhaustion gap or the next leg to a rally? The answer is we're not going to know until we see how this range resolves. This originally had been a big gap up that they sold, which wound up closing high. And then Friday was a look above and then close into range. So you have a 2-day range that's very key. I like to key off of the earnings day range. So if Baba can get back and sustain above 143.70, it will remain along. If we get below 35.21, the potential for at least a check back to the old channel here of 129s, 130 is, I think, in the offing. I think you'd also have a lot of people that would get sucked in short here thinking it's going to completely fill the gap and could get short at the wrong time for this to rally back up. Really what I'm thinking with Baba is that it's not going to just come right back down and it's probably just going to chop for a little while. If there is some kind of a gap fill, I would be an out-of-the-money put seller at the 50 MA strike or below, because look where that is, right at the channel. So if this were to come back down and fill, it probably even overshoot a little bit. Could get rid of this. I'd be looking to sell out of the money puts or even do the put ratios. like buying these and selling 2 times out of the money here. I love that. That's, by the way, is one of my favorite plays because you could usually put them on for credits and they don't cost you anything. So even if the stock goes up, it's no big deal. And if you put on a credit, you're not even usually even out the brokerage fee. I've been saying that this Baidu is not acting properly. This should be, in all intents and purposes, above 188.54, right? This was a look above and fail, held mid-range, a back up, made higher highs, and now retesting the backside of the old downtrend line. This needs to hold. I guess I'd give a little give to the 200 MA because that's been a key support for a while. So, and it's the 61.8 of the range. So if you want, you could try a right or right out play at the 200 MA, probably via short out of the money puts, same week maybe, 166s. But if this were to break, if you want the short play, would be to buy these and then sell 2 times out of the money somewhere down in here, like put ratios. These are obviously supports that I see on the chart. They're all fib ratios too, right? Interesting technical confluences as well, right? The 200 MA is right at the 61.8, the 78.6 is right at the trend line, and the 100% retracement is right at the range low. But of course, I mean, the 100% retracement is always the range low. But these fibs in particular are interesting to me. So I think that even if this came down hard and fast, there would likely, because you came from the top of the range, Chinese stocks are a little odd, and you have a bit of a lower high. So maybe this does want to, this was a look above and fail and want to come down to the range low. But I do think that the range low would hold at least the initial time before there's a bounce. So if you want to sell out of the money puts or you want to do the put ratios, I think either one of those plays work. It kind of just depends if you're more bullish or less bullish. Anything below the 20 MA, though, to me here, I'm not looking for a long, like on a bounce, unless it can clear and sustain the 20 MA in this 188.54. Like this, to me, would be another successful hold, and if it came up, it would negate the pattern and it would be good. So either like it lower down here or higher up here, if that makes sense. That's the Baidu. IBB was looking a little bit stronger. It kind of didn't close so wonderfully on Friday, but it didn't really do that much. It just kind of stalled on the backside of the old uptrend, the down channel, and you have a 50 MA and a 50, a 20, a 10, and even a 100 MA moving a confluence. I think this could struggle to really break down, but look, you came from the channel low, you got the channel high. It makes sense that it would back off a little. Friday's range, if you want to be cute, you could play short, long above, which would be 228.55, or short below, which is below 292.64 for a right or right out play. Yeah. IYT, the transports. This is an interesting pattern. It looks a little bit like the financials. We had a head and shoulders pattern here, the lower right shoulder, which usually results in the right-hand translation. And look what happened here. You had a look below and fail to the 200 MA, rallied back up straight above the high, so the potential of the breakout is a little bit suspect, but we are hanging out here, and we did hold the 10-day MA. So I would say here that the head and shoulders pattern is probably negated, and you're looking at more like something like some sideways chop. If you want to try a right or right out trade, if there is some kind of rollback on broader market weakness, somewhere between the 100 and the 50 MA, like I like buying 100 MA puts and selling 2 times out of the money below the 50 MA for a same week expiration. Or if you want to wait and there's some kind of a rollover, like let's say it loses 166.59, which is this swing low, then I think you could probably wait for a trend touch and then maybe sell some like 200 MA out of the money puts or something along those lines. Any break above here, like after a few days, but above 169.86, I think that the old all-time high would be easily in play. That was IYT. That's been up a lot on strength of like airlines and things, right? HYG not cooperating with the Dr. Copper bears, right? You had a channel break here and above the 100 MA at last. And we're kind of just trading early, late Sunday into this range here. So not really signaling recession. Maybe the reflation trade is starting to come back on if there's some strength in copper. So I think you could watch the 100 MA here. I'm fine with this with a pullback. Like if you want to try a RoRo play long the 100 MA, and then I would add to it like above the 2-day high. If you lost the 100 MA and like you bought there, you could use this low as the stop, the 259.75. And it would probably come down at the very least to try the 50 MA again, which could be where you retry it. But as long as this holds the 100 MA, I think it's kind of okay. Let's see, this again, a little bit, we're off the trail a bit. FCX, again, here, breaking the downtrend and above the 50 MA. So, and now the 20 and the 10 are starting to bend back up. So this is looking a little bit better. This could have a move up a little bit higher. If you want, if you want to try RoRo, you could use Friday's low as a stop. Wow, we're never gonna end, right? This. All right, so XLF. This was very important to me. Again, a very important pattern. Look at this, the head and shoulders play, some higher lows, but the range low kind of held. We've now kind of come up from the bottom, so I'm a little suspect of just buying this initially. But any rollback here to like even the 100 or the 50, as long as this holds, the head and shoulders pattern is negated in my view, because you've taken out the right shoulder. So this to me would just be kind of more sideways chop at this point. You're above the downtrends and you have all the major indices still below you, and they're all now upwardly kind of sloping. So this had the breakout. I'm a little leery of the breakout, although I said it was playable. But as long as this can kind of hold the 100 or even like the 50 MA, whatever tolerance, I don't know what your trade location is, it seems like okay to me. 100 MA, though, is very key in that one. A couple of things that have me a little bit, I don't really look at this very often, this bank index. This look, range low to the range high, so I'm a little leery of this breakout being all sustainable right away. Maybe there's a little bit of a rollback initially and then it goes, but this is looking better, right? I mean, this is now a multi-touches up here. I'd say the head and shoulders thesis is a little bit stretched. I would like to see a little push higher. Maybe it peaks on the Fed or whatever, White Rabbit peaks, for those of you who are little fear and loathing fans. But anything that holds pullbacks to the 50 MA now to me are okay. So even same week, I'd be interested in selling those out of the money puts. JPM not looking amazing yet. Right to the downtrend at 100 MA. Didn't take out these tweezer highs, so a little suspect still here. Also, this was, I guess, a look below and fail. It's kind of coming back up to the top of the range, but I don't love that it came up so hard so fast. So this could have a little bit more to go, but I think that you'd be better off selling either out of the money puts or buying a pullback if you're a stock kind of guy or gal. Yeah, the 50 MA, though, here to me was key. So if there's like a little weakness Monday, you could try RoRo at the 50 MA with a stop below Friday's low, considering it's not that far below there. Goldman Sachs. That Lloyd Blankfein is turning out to be a little chatterbox on Twitter, right? Still not breaking the triangle yet, right above the 50, like right at the 50 MA. I really need to see this get back above and clear the 100 in my view to really get busy. But as long as this can, like if you take out Friday's high and the channel, I think it would have a quick shot to the 100. So there could be a quick move up, but you know, be mindful that you probably want to be putting it out there. Citigroup, this is the strongest of the pack, new all-time highs, right? I think a lot of this is up on Steve Eisman. He was the big short guy, saying it was, you know, he's bullish. And the stock is bullish. It's now above the, it's kind of breaking out here. So I like any pullbacks in this near the 50 MA. It's probably going to take some time to catch up, but any pullbacks in C I like. Blackstone is one I've also been a bit of a fan of. Holding kind of high and tight. You have kind of equal lows here. So there could be some rollback in this to retest the breakout, even by 31s, but I still like this one for selling out of the money puts or buying the dips on any pullbacks in here. I think it might be a little limited here with the initial upside here, maybe to like 30, close to 35, close to 36. that is kind of my end PT there. S&P. All right, so we had a big doji at the top of a range, which probably has people thinking short. But I'm not necessarily sold on that just yet for a couple of reasons. One, we did get a new all-time high, and I remember I had talked about a few upside targets. I had been targeting 245. It stopped there like almost to the penny and then reversed. If you look at the ES on the intraday, this was also why I think we may have had some weakness. You had poor highs up here, and I'll show you this. Look at this. This wasn't just like a spike up that failed. We spent time up here, right? Enough that there's poor highs. And then there was this rollover, and then the flash crash kind of in Amazon, which got this going. But I'll say this. This was sort of value area low here. It's not showing on the chart for whatever reason here. But we had the responsive rally to the POC, and then this stopped almost to the tick on S3. It was a very narrow value area. So this is still trading all very technically. And then you kind of had the rally into the close. Didn't quite get the VWAP, but it was close. So it seems to me that this was still very, very orderly and organized, and didn't it closed basically almost unchanged. So again, there was a lot of volatility intraday, but the close wasn't all that impressive. I can see futures opened and we're down a little bit here. I think we also had a flip from M7 to U7, and people were waiting for the weekend maybe to re-up. Like if you're closing out of your M7, maybe you don't want to do it the same thing on a Friday, and there wasn't like the onus to buy because there were people flipping out of that contract for the contract roll. So I think that could have added some pressure. All right, so we're left on SPY with a doji here, right? We're still above the 10 MA. We didn't quite get the 20. We didn't quite get a retest of the breakout, which, believe it or not, this could even pull down to as much as the 240s, and it would still be kind of okay because that was the breakout. We kind of never got the full check back here. But I'll keep it simple. Above Friday's high to me would be a long, and below the low to me would be a right or right out short for at least the 20 MA and probably a retest of the breakout. Maybe if the Fed is like overly hawkish, we get a shot down to like the 50 MA or channel low. In my estimation, if there is a move down, like something larger, like we're going to get a correction, we have fibs here, and the 50% and the 61.8 are at very defined levels. The 50% fib is right around the 50 MA, and the gap fill and the channel low and the 61.8 are all down around 236s. So if you want to do this the Chicken Little way, what you could do is buy 240 puts and sell 2 times out of the money at like 236s or something around there. I don't know if there's juice in there. I'd have to see how it looks. But I think this area to me would somewhere between the 238s and 236s would be kind of my end target for that move. Assuming the 240s breach. So what you could do is wait and see if this breaches. At that point, the IV would be jacked, so there would be some money in same week or next week plays. When I do those put ratios, I either like to do same week or just following week, no longer than that. So right or right out play again is long above Friday's high or short below the low. The expected move this week is $3.11, so 246.32 on the upside. Oddly enough, 240.30. Look where this breakout is on the downside. So this is kind of sort of what the market's factoring in, maybe a check back. IWM. Now, what do we got in IWM? Now, my question for you is this. There's a couple of ways to interpret this. We got the range low, and now we rallied up past the range high with a look above and fail bar, right? This closed still above the prior days, but it didn't close above the range high. It was sort of a look above and fail. Now, do we rotate back down, or do we kind of work our way up into the bar? I can't answer that yet, but what I can answer is that the reference high here was 140.86, and Friday's low of day is 140.70. So if this is going to fail, short below Friday's low, probably for a pullback to the 10 MA. So I like this either as a right or right out short for a pullback, or if we start accepting price above like 41.82, it's probably a long still for a move up higher. So that's IWM. Expected move is 255, so 144.16 on the upside, 139.06 on the downside. This is where it starts getting fun or interesting, whatever. The Qs. Expected move this week is $3.84, so up to 143.82 or down to 136.14. Now, I believe I have a play on this. I think I'm long the 136 puts and short 2 times out of the money 133s or 132s. Look, the gap filled is down here, and a retest of the breakout, and the 100 MA are down here. And the 136s are right around the 50 MA. That's also the channel low. So if there were to be a snap, it would make sense that we would come down to retest the breakout, which has not happened yet. Yeah, I think the break even on that play is like 130, 129, 130, which is, look, the range low. That would be basically 100% retrace of this move up. So I think that that's a high probability trade. I got that on for a net credit. So if that were to come down hard and fast, there's a lot of volume here. I could get into trouble on that, but I would probably be able to easily readjust that if it does get into trouble. So what happened here besides breaking the trend? I had mentioned that we were getting close to the channel high and was expecting some type of a pullback. This was quite dramatic on Friday. We did close a little bit below the 20 MA, which isn't fantastic, although you can see this was a one-day event here the last time this came down. I don't know if this is going to be the same thing or not. You can see we've had a lot of these, right? One day kind of chop, and then we moved up again, retest, and then went. Again, up, one big day down, and this didn't even last very long. So I don't know what dreams might come of this, but it seems to me that there could be some more pullback in Nasdaq, and the 100 MA would be first and foremost would be the channel low, with the the 50 MA and the channel low is the target, and then maybe the 100 MA if that were to snap. So we'll see how that plays out. I'll get into some important names. Look, also the reference low here is right around there, so this area makes a lot of sense to me. This is a lot fast. If an early tell this week will be how we open up on Monday, and if we trade in the spike or if we start trading back up above the 20 MA, that will be key. The more time we're above the 20 MA, the better I feel about the long end of it. Below the 20 MA, I feel a little more on the short end. The big key here is this one, Apple. There's a couple of things I see as encouraging and a couple of things I see as discouraging. One is that this high is a little bit lower than here, so it could be considered basically a double top. Look where we pulled back to, basically right to the breakout, and still closed above the 50 MA. So that to me is kind of all right. I mean, we're just below the channel. Like if Monday is an up day, you'll be back into there. I think that this was supposed to pin 150, so it wouldn't surprise me to see there to be like a move up to that early Monday if there is some strength. I don't know if it'll hold or not, but I think that's really might be where it wants to go. If this were to continue down, where would this be going? Look at this. We had an old up channel. Let me put that in just green for the time being. We could make this one yellow now, since it's a little bit more iffy, and we're looking. If this were to lose this low, I would think 100 MA test and this kind of the breakout, the reference high here, We spent a lot of time. This was a lot of support. It was resistance. It was support 140. And it's also the backside of the old up channel. Look, we broke through it, and it's never been retested. What would I like? Put ratios. Buy these and sell like 2 times out of the money here same week. Or if you want to wait for it to come down, just sell out of the money puts wherever the 200 MA is at that time. If you want to do longer dated or shorter dated or whatever. But this area to me, 140 would be the kind of my max range downside target for the moment, and I think this area would be some interesting support short term. So let's again, more time we spend above the 50 MA, the better I feel about it. I don't love that we're below the 20, just so you know. That to me would likely be some resistance. If there's a move back up, the 20 MA might be the resistance now. But as long as we're kind of above the 50, it's better. Below the 50 isn't as good. That was Apple. Amazon. Now this got ridiculous during the day. I was watching this trade. I watched it as it happened. And look where this stopped. The low was 927. There wasn't that many contracts that traded here. Let me just show you what this looked like intraday. This was like a 1-day, 5-minute. This was insane. I mean, Amazon wasn't really trading well the whole day. It was sort of like just kind of coming down, and then it started getting steep here, and then there was like a flash crash, and it kind of came back up. So what am I looking for in Amazon? A couple of things. Let me go back to the daily. Let's go do I've been using the 3-year daily, so we'll use that. We'll zoom in. A couple of important things. This was their earnings after hours high, 965. Anything that maintains above 965 to me is still okay. I mean, listen, we got the 1,000. There's a pullback. Amazon's been very strong, right? Their earnings low was 910, and look where the trend line is, right around there. So this area to me would be an area that could be, when Amazon reported their low of day was here, and the high of the trading bar was here. So this range, all in here, is important. There was a breakout at 923. The low of day was 927. So there's a lot of reference support in here. So this area to me seems important in Amazon. Interesting, right where it kind of stopped. Now, there's a couple of schools of thought on this. My school is that the algorithms see this, and they tend at some point to want to retest it. That's just my superstition. It's very possible that happens. I drew in some other areas of support, like a channel low here around 885, 884, 49, 885-ish area. Look where this reference low was. And then the real true breakout was 847s to 860s. That band is, look, around the 50% fib, and then you have a 61.8, a little bit lower, but that area, and that's the next big that's really the next big volume distribution. So I like to think in stages. I don't know that we're coming down here, but I'm just giving you the kind of worst case scenarios. This area to me seems like kind of the worst case scenario. This closed slightly below the 20 MA, so I'll keep it simple. The more time we spend above the 20 MA, the better. And the more time we spend below there, the more I'm going to think the 50 MA gets a retest. So this was sort of the last breakout area. So this whole area I think is going to be a point of congestion for a while. I'd be curious to see what happens here. If we get an equal low, if there's a look below and fail, if there's a look below and go, or if this just chops inside this range for a while. I think these highs are going to be out for a little bit. I don't think that they're going to be so easy to recapture initially. So I'll say this. If we can get back up above the 20 MA, I'd be a little bit more constructive. Hold. I'm not talking about like a gap up to the 10 and then fail and then comes back down. But if we can kind of just coast around here and build some value, I'd be okay. The more time we spend below the 20, the more I think that the 50 could get a retest. The 50 has been a lot of support. Look, this was the resistance. Once we got above it, it became the support. There's been a little bit of move below, but this trend and the 50 has been the key. So this area to me is sort of like if Amazon were to come back down into here, I'd be looking to sell out of the money puts at like 885 down to 847. I think that area would be the area to sell out of the money puts. And if you want to play put ratios or put spreads, you can buy 50s and sell like 100 MAs. That area to me would be the true support. Facebook got up close, made a new high, big intraday reversal, but held the channel low and the 50 MA. But again, slightly below this 20 MA area. I don't know why that keeps, let me get out of this tool. It's really annoying, right? So you have a big intraday range here. If this were to like break, like we lose this channel low, where would this be going? Maybe the 100 MA. I mean, the worst case scenario in my book, and this would be consistent with the amount of point. Usually Facebook has $20 pullbacks. Look where the breakout was, basically around there lower and where the 200 MA is. So this is kind of the worst case scenario. If you want to buy longer dated put ratios, maybe buy like some 100 MAs and sell 200 out of the money. But this area to me would be the real true support. I think that area would hold. It would be a retest of the breakout. There was a lot of congestion here. You can see there was a look above and fail. Once we kind of got through there, it was okay. So this area to me is it's also the 50% fib. 61.8 is down here. I think that area would be sort of the max level. So you have a big day range. So in my view, the long would be above the highs, or the short would be kind of below the lows to initiate that put ratio. Again, really not that much technical damage done, though, in this one. It closed sort of like all right, above the 50 MA, above the trend. So as long as that trend holds, it's like kind of all right. If you start losing the low, then yeah, I think that this could start wanting to see hundreds and maybe 200 MAs. That's my take on Facebook. Netflix. Now, I hate to be an I told you so, but where did I say I thought this was going to top out? Between 164s, 168s, with 166s being my level. Remember? It's the 1.618. I think it was 166.2 something. Let me give it exactly. Let's zoom in. It was 166.22. And we made 166.87. Again, pullback, 50 MA basically held in range low. If this were to come down, we'd get a trend test around 149s. The gap fill is 143s. So if you want to play this Chicken Little way, you'd be buying put ratios like 50 MAs or 100 MAs and then selling 2 times out of the money lower near this gap fill, which is oddly, if it took some time, trend and gap fill are down at 133s. I don't know what the juice is in this, so I'd have to take a look. But that was the true breakout, that $10 range. And I think would find support if it were to come down kind of hard and fast into there. And these tend to sometimes do that. Again, this has had these kind of days before, only to shake it off and rally higher. There's not really excess on this either. So this is sort of like a liquidation break off a poor high. So, and off of an all-time high. So I think that all of these are coming basically from all-time highs. So there will be a leg down. Maybe there's further to go, but there will likely be a rally at some point to lower highs before there's real danger of major rollover. Usually when big rollovers happen, it comes from a rally to a lower high first. So all of these, I still am looking to buy the dip at least this time around for that bounce higher. Google didn't do too much technical damage. It still closed above kind of the trend, and look, it held the backside of the old channel. Easy play on this is a short below the low for a move down probably to the 50 MA and range low. I wanted to also point out something. Look at this progression line that has been the mark of tops in Google for a while. What was resistance should now be support, and that's right at the range low here. So I would like to do out of the money put ratios, like buying these and selling 2 times out of the money lower wherever that may be, or up here and 2 times out of the money here same week. 50 MA is sort of right at the range low. So again, more time we spend below 20 MA, I start thinking 50 comes into play. Above 20 MA probably grinds back up But if you want to be an exact science type of a guy or gal, above 1,005.50 would be a long higher. Below 953.37 would be a row trade lower, probably for a 50 MA test. And down here on that progression line should be, at the very least, a day trade long for a bounce. I would be an absolute buyer wherever that might be. Tesla. The shorts in this paid a very dear price. 360 was my upside target, and we got some gravy on this play. I know there are a lot of people who are still short this name. There could be a pullback to 325. That was sort of the breakout area. It's also like where the 20 MA is. The 50 is just below there and would probably be there by the time it got there. Look at this. Double tops, came up through there, and once this kind of punched through, it really went. So this area to me would be an area, and it's also, look, the backside of the old up channel, right? Above failure, now we came through. It's probably due for a retest, and that, for at least the first time, I think would hold for a bounce. This is still much more bullish than all of the other ones, right? We're still above the 10, still above the 20. And there wasn't, I mean, you did have a big outside reversal day, but I mean, what did you do? I mean, you still closed inside of the last couple of day range. I mean, this hasn't really fallen apart just yet. So my downside target in this would be around 325. Look, that's where the next volume distribution picks up. It's this channel low, and it's this old channel high. Yeah, so that's the area to me in Tesla, if there is going to be a downside projection. Nvidia. Andrew left. The notorious Citron seller, short seller, came out and basically said that he thought this was going to come back down and basically fill the gap. He was talking about 130, I think, he thought was the fair price for this at the moment, which is basically down into where this kind of breakout took place from. Okay, if he says so. My max downside on this is sort of the 61.8 and the breakout, which is sort of 121-ish. That's a lot of points, right, where this could come down into. But look where this high here, and this is really where the breakout took place from. So now the 50 MA is down there. This is still above the 20 MA, so I don't really get too bearish on this until you lose 20 MA. If you lose the 20, maybe the 50 comes into play, or the gap at the first stages, the gap fill. This just got my targets and then some. It's got way overdone, so it wouldn't surprise me to see this come back down. If you want to try this right or right out short, I guess below the low of Friday, probably can play for that gap fill. And I'm curious to see if this is going to stay inside the body of the Friday. That's really the key for me, if this could stay inside the body. So like 149s, 150s would still be okay. I thought this got a little overbought. I mentioned in the SOX, that's the Semiconductor Index, that this was trading above the channel high. We still are above the 20 MA, amazingly enough. And if this were to come down, it's a lot of points. But you have a gap fill down here and a 50 MA and a channel low and 100 MA, which is kind of riding the lightning up. Not quite to the channel low, but you know, it often you can exceed, come to the midpoint of the channel. And I'm curious to see something again. This is an add-on that I hadn't really even been thinking about doing until I saw this chart. This low was 960.01, right? Let's do this. We'll take out the 38.2 because we don't play that way. 960.01. Now, check this out. The 61.8 and the channel low and the 50%, the 50 MA, the channel low, and the 61.8 all line up really well down at 1,032.53. So I'd be into doing some put ratios. Maybe if we start trading below the 20 MA, again, you could initiate it, like buy some kind of puts here and then sell 2 times out of the money down here. This really should hold. because of that technical confluence with the channel low, the 50 MA, and the 61.8. That I love when there's a confluence of technical levels. Maybe there's an overshoot to the gap fill or whatever, but the put ratio or put spread could be designed that way for this area to kind of still be within your break even. Again, the more time we spend trading above the 20 MA, I think that this becomes maybe a one-day wonder. The more time below there, I'm starting to think 50 MA test. So we'll keep it real simple on the stocks. Priceline. 50 MA has been the key in this. Look at this. The 50 caught it here, again here. So as long as it holds the 50, I guess it is okay. Below the 50, I'll start thinking 100 MA test. So we'll keep it simple, stupid with Priceline. PayPal. This has gotten a little nuts, right? I said 55 were my target. We basically got it 4 cents above my end target range. If there is to be a pullback, and I think it would be a great opportunity if there was, because I know a lot of people kind of miss this. I get a lot of questions about where I thought this was ending, 55s. We held the 10 MA. The 20 MA test would be a test of the old up channel, right? And the trend. So down in like 51s, this area to me would be interesting. If you want to play put ratios, you could buy these and like sell 2 times out of the money at like 47s or whatever. What's the high of this bar here? 48s. So yeah, I like that as a put ratio, buying these and selling 2 times here, maybe even a little bit longer dated. But we got my end target. I hope people took profits. And if you want to try a short, it would be below 52.85 for the pullback to the 51s, and maybe even the 50 MA, which was the big kind of support. I think a lot of people will freak out thinking, oh, the gap has to fill, but I often find that there is a pullback into like this kind of initial area that winds up being a hold, a buy area. And you can see this was an old, another old up channel also, a channel within the channel. So I think 47s, 48s is going to be really solid support if you're looking for areas to sell like out of the money puts into. Race, someone asked me last week where I thought this was going to peak. I said 90.28. We got 91.94 and pulled back. It's still above the 10 MA. If you lose the 10 MA, I think the 20 MA gets a quick retest around the 86s. I don't tend to look back after we hit 200, 2 times ranges. Those tend to be the end of the road for me. So if you're long, a good idea to book profits. And I'll end on Restoration Hardware, because this was a trade I said I liked. Remember when I said often you come back into these initial ranges, everyone thinks the gap fill is happening, but it holds and then rallies? All right, so we did get the rally. A couple of little pieces of concern for me. One is we're basically at the 50 MA, which was, look, this was the key breakout. We didn't hold it on the breakdown, so this should now be a little resistance again, and it's also the 50% fib. Maybe there's a little bit more room up to the 61.8, but I would be looking now to book into strength. Are pullbacks buyable? Maybe, as long as 47s hold. So if there's a pullback to 47s, which is this range low and this sort of topping tail here, it's okay. If you want to buy row here or sell near dated out of the money puts, maybe this like does a pullback to here and then goes to fill the gap. But up here, I think it's time to start booking some profits into strength. And we're over an hour, and we'll end it there. I hope you guys and gals had a great week. I will be doing a Fed special on Wednesday after the interest rate decision. That'll be my YouTube live video. Have a great rest of your week. If you like this video, the best way to say thank you, please, is to retweet it on Twitter. Thank you. Have a great rest of your week, and cheers.